Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Following the high inflation numbers and interest rate hikes, crypto has made a notable comeback, but the broad rebound may hit some roadblocks, with some sectors positioned better than others. Joining us today is Jodie Gunzberg, managing director at CoinDesk Indices, to share her thoughts. Jodie, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
You got it. And you say there may be some obstacles with this crypto comeback. So tell us more about what may get in the way of this rally.
First, let's remember the rally started with a technical rebound off the loss driven primarily by inflation and the aggressive rate hikes. So now there's good news for Bitcoin and most other assets is that inflation came down. The bad news is that it may have come down a little too quickly. So while the year-over-year CPI of 8.5 for July was still high, it was less than expected, with a relatively severe drop of 0.6 percentage points from the month prior. And Bitcoin, like many other risk assets, including real assets, commodities, hedge funds, and small caps, need inflation to decelerate more slowly to generate higher returns. Also, the rising rates and strengthening dollar have been headwinds for crypto, especially since the tightening is coming on the back of what looks something like a crypto version of the global financial crisis.
With this forceful economic backdrop and the tug of war between the SEC and CFTC oversight of crypto, should we expect crypto to behave more like equities or commodities?
That's a great question. And it depends on the type of digital asset by its use case. So the assets in the currency sector and in DeFi are more correlated with stocks given their higher sensitivities to the macro factors. But the macro factors also drive commodities, though in different ways. For example, since commodities and crypto are both priced in dollars, they should fall with a rising dollar, all else equal. But as inflation comes down, commodities are far more vulnerable, especially oil, since it is the most volatile component of inflation. And as interest rates rise, gold suffers most. So in this case, Bitcoin acts a little more like gold than oil, but we really haven't seen much of a relationship of Bitcoin to either. In fact, I might expect Ether, that's part of the smart contract platform sector, to get more correlated with gold, given its dual use case as a commodity and a store of value.
How much do you think the fundamentals play a role in the sector performance, and can they be more powerful than the macro forces?
I think the fundamentals are extremely important in dispersion of returns of digital assets with different use cases. For example, this month, the excitement over Ethereum's merge pushed Ether up about 40% and has driven gains in the smart contract platform sector. And from this, the digitization sector has benefited even more and is up nearly 60% for the month, as it includes the Ethereum name service. That's an open source blockchain-based naming protocol, which provides naming for decentralized wallets and websites. So I think the fundamentals of the digitization sector is driving much of its outsized growth. And I think it'll likely hold up best, along with the culture and entertainment sector, despite macro headwinds.
And finally, Jodie, do you think a recession will hinder crypto's ability to grow and continue to rebound?
Although we don't have much history to look at for guidance here, Bitcoin was born out of the Great Recession and performed very well in 2020. If a recession were to trigger more stimulus in any meaningful way, that could be a catalyst to drive crypto up. But in a recession, there is always a risk of stagnant investors that could stunt the digital assets growth. So again, the highly economically sensitive sectors that will likely be most impacted by recession are currency, smart contract platform, and DeFi.
All right, Jodie, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.